We've talked about this in our Chaos crew, but we've talked about it on the channel fairly frequently, and that's the stress test. We've been looking forward to the stress test, and it was announced yesterday that the major banks that you guys all care about passed the stress test, which means now that those banks can increase their dividends, one. Probably more importantly, buyback shares. Morgan Stanley stood out from the pack. Goldman Sachs, I would say, stood out, and Wells Fargo. Morgan Stanley led the charge, basically doubled their dividend, and they announced that they're going to buy back $12 billion worth of shares through June of 2022, so basically for a whole year. A bunch of other banks announced. Bank of America announced an increase. I think it was like 60%. Wells Fargo surprisingly was down, but they doubled their dividend and they announced a buyback. And so we brought that discussion up, and we were basically like, okay, that's interesting because some are moving, some are not. You had a hypothesis and I had a separate hypothesis. So why don't you talk about that?
As far as like why certain banks are moving and other ones weren't. So my initial thoughts on this was, since the industry itself is basically doing everything together, like they're all increasing their dividends, they're all, increasing buybacks as a result of the stress test. I felt as if most people are looking at the industry and not necessarily looking at a specific bank. So they're just going to go straight to best in class. And if I'm a hedge fund or even if I'm a retail investor, the first two that are going to come to mind is going to be Goldman Sachs and Morgan Stanley. Morgan Stanley was up as much as 4.5% today. Goldman, I think, was up over 2.5%, I want to say, somewhere around there. And those are the best in class type of stocks. So if I'm just looking to get into some financial institution, I don't care what it is, I'm probably looking at something like one of those two. Yeah,
and I can see that. I didn't think, my angle was a little bit different because something like this should move all of the industry. Now, best in class should have more volatility and should outperform. But what was interesting when I was looking at especially Wells Fargo, because I actually went the Bank of America route, and the reason why I did it was Goldman Sachs is in our dividend bot. So I typically don't like to have overlap there. And Bank of America, I felt, was in a better position than Wells Fargo. Wells Fargo has made some poor business decisions on their leadership, so I'm not confident in them.
And their operations.
So I did that. But what I theorized was the ones that did well are leaning heavily into investment revenue. Where you look at JP Morgan, you look at Morgan Stanley, and you look in Goldman Sachs, really what stands out with Goldman Sachs is their wealth management side of their business, Morgan Stanley as well. The exposure to real estate and loans was what I looked at with Wells Fargo and Bank of America, and only the common denominator that I could find. And so I'm wondering if that plays into it at all as well, just because we know the issue with real estate and supply is low, so you're not going to get as much loan volume. And so that's one thing I wondered as well. Obviously, investing has been through the roof, and any bank that focuses on investment and wealth management should continue to do well.
At Goldman Sachs, their trading activity has more than doubled over the last 12 months, and I think that obviously plays a big key role into that too. The thing is, as far as the other banks, they lean heavily into lending too, which obviously plays a factor, especially Wells Fargo, Bank of America.
Low interest rates play a factor in that.
So that's a big deal, and those banks are really struggling to get loans out. They're willing to give out as many loans as they can. Usually you see it tightening up on a economic contraction, and this has kind of been the opposite. They've been trying to give money away and they can't do it. So that also plays a factor for sure. And regardless of them buying back, I guess people just don't really would rather favor something like a Morgan Stanley or Goldman Sachs.
I'll be honest, I still am okay with being in Bank of America.
I don't think there's anything wrong with it.
But I think leading into their dividend increase, we could see a little bit of a run. And I think overall, I believe we do see banking as a whole begin to creep up, but the leaders probably still outperforming in general. So I'm going to hang on to my position and just ride it out and see what happens. Worst case, I get a little bit of a dividend.
This was actually one thing that there's very few things that I disagree with, and you guys know, everybody knows that I'm a big fan of Tom Lee, and he talked about how They actually downgraded. Fundstrat actually downgraded the financials 2 weeks ago, and I don't know if maybe they just overlooked this part, or what. But the financials, the XLF has actually been doing really good, and it wasn't like a downgrade to sell or anything like that. It was just to neutral instead of outperform. But still, I mean, I think that this is going to be a huge case for them to continue to outperform probably through the end of the summer at least.
I bet it was an oversight, which sounds ridiculous, but I do believe it because it's been coming for so long. I mean,
Yeah. Maybe they felt as if it was priced in or whatever, maybe.
Or honestly, what if it was just overlooked? Like, because there was no set date. It was June 30th, essentially.
Yeah.
And I mean, that sounds ridiculous for me to say it was overlooked, but we've been talking about it for like 3 months.
Yeah.
Like, it's been so long. Like, for the whole year, they already talked about it. So it wasn't an ongoing conversation. It was at the beginning of the year,
Yep.
I think, or the end of last year. They said June was a stress test. And so it's surprising. But additionally, what I would say as far as a consideration is it's not sexy. So like everybody's been talking about the meme stocks, everybody's been talking about crypto, and I think that what we talked about before is like attention's been elsewhere, and so nobody wants to hear about stress test, and so nobody's talking about it.
Yeah, I agree.